Today, Binance reportedly backs out of its expansion into Germany. South Korea launches a new agency to crack down on crypto crime. And Rob Frasca, managing partner at COSIMO Ventures, weighs in on the demand for AI-related projects that incorporate crypto. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto investors once again keeping a close eye on the Federal Reserve's latest interest rate decision. After pausing hikes last month, the Fed raised rates by 25 basis points. Now, ahead of that news, Bitcoin and Ether prices held steady throughout the morning. Solana, meanwhile, climbing higher to recoup losses from earlier in the week. Okay, let's talk about the top stories. Binance is halting its plan to expand into Germany. A spokesperson for the crypto exchange told us it's, quote, proactively withdrawing its application with the Federal Financial Supervisory Authority to operate in the country. The move was because, quote, the situation, both in the global market and regulation, has changed significantly. The spokesperson added that Binance still intends to apply for appropriate licensing in Germany, but it's essential that its submission accurately reflects these changes. The withdrawal comes about a month after Germany reportedly told the exchange that it wouldn't grant it a license. And at the time, Binance told us that talks with regulators there were an ongoing process. Next, South Korea is launching a new agency to tackle crypto crime. The Joint Investigation Center for Crypto Crimes is a new task force made up of 30 people from the country's judicial, financial, tax, and customs agencies. The goal of the center is to crack down on the rise in crypto crime and bolster investor protections because, quote, market participants are practically left out from legal protection amid incomplete laws and systems. South Korea has been a hotspot for several crypto controversies, including the collapse of Terra Luna and the investigation into its founder, Do Kwon. Last, multiple committees in the U.S. House are considering a slew of potential crypto regulations. On Wednesday, the House Financial Services Committee decides whether to bring the crypto market structure bill, which expands guidelines for the CFTC and SEC, up for a vote on the floor of the House. The House Agriculture Committee will also vote on that bill on Thursday. Now, if the bills make it through committee, it would mark a significant step in the push for new crypto legislation, which the Government Accountability Office said just this week was necessary to properly regulate the industry. All right, on to our main story. This week, Sam Altman, the CEO of OpenAI, launched Worldcoin, the native token of his blockchain ID verification project. In light of this development, Crypto World's Talia Kaplan spoke with Rob Frasca, managing partner at COSIMO Ventures, about investor appetite for AI-related projects that focus on crypto and blockchain technology.
It seems like everyone's talking about artificial intelligence and ChatGPT, that chatbot developed by OpenAI. And just this week, Worldcoin, the crypto project launched by OpenAI's Sam Altman, went live. Your firm, COSIMO Ventures, invests in new technology like blockchain and crypto. I believe artificial intelligence is in the mix as well. So I'm curious to get your take on that Worldcoin development. And are you looking to increase your investments in AI-related projects that incorporate crypto right now?
Yeah, I actually built and sold two AI startups. My first AI startup was way back in the 90s when they didn't even call it AI. It was really called machine learning out of Carnegie Mellon, using neural nets and intelligent agent type of software to do advertising optimization. Ultimately, we sold that company to Lycos. And I had another company that used AI or generative algorithms and genetic algorithms to do consumer preference modeling, which was sold to Nielsen. So I've been in the AI space for a while. It doesn't surprise me that Altman is also looking at blockchain and looking at Worldcoin and how it plays. I think ultimately all the value exchange rails are going to be Web3 or they're going to be blockchain. So when you think about AI models, when you think about how they're paid, how people pay for them, when you think about AI needs a lot of data, right? It really needs a huge amount of data to train it. So I think what you're going to need is blockchain and crypto rails to ultimately pay for the data. So let's say I'm a website, I have all this data and I want to sell it to different AI engines. I could use blockchain to do that. So I really think that the two are perfectly suited for each other, and it doesn't surprise me to see what he's doing with Worldcoin. I think you're going to see more. The other thing that's important to understand about AI are the models themselves. How are they traded? Do they work? Are they biased? Are they problematic? Are they real, etc.? And I think having blockchain associated with kind of the provenance, the validity of these models, and how those models are valued and traded and used and paid for, the two go hand in hand. And I think, for us as investors, we're looking at both. We tend to be, COSIMO Ventures, my firm tends to be all in, really focused on Web3, blockchain, and how it's used. So, we don't invest in AI particularly, but we certainly look at using blockchain, to see how it manages that kind of value exchange. Ultimately, those micro transactions that are going to happen.
So last time you were on the show was shortly after FTX filed for bankruptcy. Now we're seeing an increased crackdown from the SEC as the agency recently filed lawsuits against two major crypto exchanges, Binance and Coinbase. What was your reaction to those lawsuits, and what do you think the implications are for the industry?
Now, look, there's a lot of fear and uncertainty and doubt in the U.S. That doesn't diminish the value of blockchain and crypto and really what it means for the future. It doesn't at all. And if you look around the world, all around the world, the U.S. is really the only country that doesn't have its act together, right? Europe's got regulations and rules. The UAE has regulations and rules. Just the other day, the Prime Minister of Japan said, crypto is the future of finance, and we need to be friendly about it. I'm paraphrasing what he said, right? And so I think the entire world recognizes that blockchain is really the future of finance. So I think what's going on in the U.S. is there is no regulation, so there's a lot of uncertainty, and so there's a lot of fear. I'm happy to see Congress getting their act together, right? They're voting on a bunch of different laws right now, bills that are in the House. Some Digital Act stuff. So from my perspective, what I see is that there's this uncertainty in the market, but you got to look at what the big players are doing. When you see somebody like Larry Fink of BlackRock, which is a 7, 8, whatever, 9 trillion, the largest asset manager in the world, launch a Bitcoin or file to launch a Bitcoin ETF and is on the news every day talking about the promise of Bitcoin and blockchain and crypto, that tells you a lot. It tells you he knows where this ball is going. And I got news for you, BlackRock doesn't do anything unless they really understand where things are going. But then when you see behind that, right, you got Invesco, the number 4 asset manager. You got Fidelity filing. You got Van Eck, Wisdom Tree. I think there's 7 or 8 now. And then you've got Fidelity, Charles Schwab, and Citadel launching EDX, which is an exchange, right? Right? Now, here's the nuance of this, and I think it's important. I think that the problem with FTX and the problem with, I've got a little thunder going on here. I got a thunderstorm going on, so hopefully you didn't hear that. But the problem with these exchanges is that they do two things. They're an exchange and they have custody. And unfortunately, the custody part of that is a black, opaque box. And so people who put their funds into FTX, what was going on was FTX was using those funds. And guess what? They lost them. And so that's very problematic. If you notice what Fidelity and Citadel, this EDX exchange is about, it's about a non-custodial exchange, meaning they don't hold those assets, right? Most DEXs don't hold assets, right? So I think what that's telegraphing, what that's saying to me is that the U.S. regulation is saying, wait a minute, guys, you can't have an exchange and have custody. The two have to be separate. And the custody has to be qualified like every other custodian does, right? And the exchange needs to be qualified like every exchange has to. And so you can see that's where this market is going.
What do you think the signal of confidence from Wall Street in crypto could mean for prices?
Right now, the crypto market is generally pretty small. I would say it's in the first inning. And, when you look at, just BlackRock coming into Bitcoin, now don't forget, right? It's a limited supply. Okay. So you got a limited supply, and now all of a sudden you're going to turn that whole faucet of demand up. Okay. Grayscale, through a trust, which was kind of an interesting structure to buy Bitcoin. That was a $56 billion. They raised $56 billion into that thing at the peak, right? That's nothing compared to what a BlackRock is going to do. And then you layer Invesco, Wisdom Tree, VanEck. I'm sure I'm missing a bunch of them. I think there's 7 of them. So for me, I look at that and say demand, limited supply, price action, liquidity action is going to go through through the roof.
Now, Frasca goes deeper into what he thinks will happen to crypto markets and also reacts to the Ripple XRP ruling. You'll be able to catch his full interview on our website, cnbc.com/cryptoworld. Okay, that's all for the show today, but we will be back again tomorrow, so we'll see you then.